It's a working paper. It's not final, and we'll be happy if any of you can make any other inputs.
A roadmap for evidence-based insurance development for Nigeria's farmers was launched in November 2017. The public presentation of the working paper number 218 is an outcome of a consultative process that began in September 2014 between the Federal Ministry of Agriculture and Rural Development and the Consultative Group on the International Agricultural Research Program on Climate Change, Agriculture and Food Security. The research was aimed at overcoming the problems of moral hazard, adverse selection, and resulting high transaction costs and processing delays that have plagued indemnity-based agricultural insurance.
So what we identified as the promising early steps to make this happen would be, first of all, the government developing public sector capacity and making sure that the regulatory environment is conducive. So there's a recommendation of forming a task force of public sector champions from across agencies to serve as the center of expertise in agricultural insurance across Nigeria, and then to spearhead some of the public sector efforts outlined in the roadmap. Then once this is in place, the public sector needs to invest in the capacity of the private sector insurance industry to understand and develop support for, develop products and develop support that will work for smallholder farmers and for the agricultural sector. And then a pilot implementation and scaling phase.
Traditional indemnity-based insurance, often referred to as multi- or named peril crop insurance, requires farm visits to verify loss claims. According to recent reports, although this type of insurance has been effective for large-scale farms, adverse selection, moral hazard, that is, an incentive for farmers to neglect good risk management in order to receive payouts, and high transaction costs and processing delays associated with verifying claims have made this type of insurance generally unfeasible to implement at scale for smallholder farmers.
Agriculture is a business. It's not a development project. And because it's a business, we need to ensure that this business thrives in a low-risk environment. Insurance forms part of the tools that ensures that we can reduce the risk perception and actual risk in the agriculture sector.
Agriculture insurance in the form of multi- or named peril crop insurance product has been available in Nigeria since 1987. It reaches an estimated 35,000 farmers through the National Agriculture Insurance Company. Meanwhile, index insurance largely overcomes the problems of moral hazard and adverse selection that have plagued indemnity-based agricultural insurance. Basing payouts on an index eliminates the need for farm visits to verify losses, greatly reducing transaction costs and processing time, making it feasible to insure millions of smallholder farmers.
We'll be working to ensure that the science and knowledge that we produce through research can influence agriculture policy in all countries in Africa. One of the ways we're doing this in Nigeria specifically is through the National Agriculture Resilience Framework. This insurance roadmap document will form part of the revised edition of the National Agriculture Resilience Framework. And this framework is Nigeria's roadmap and strategy to build resilience in the agriculture sector. This framework was set up by the Advisory Committee on Agriculture Resilience in Nigeria, ACARN, A-C-A-R-N. And what we're going to do is reconstitute ACARN with a new mandate, not to develop the NARF, but to implement NARF.
Experts claim that in index insurance, coverage is based not on actual crop, livestock, or income losses, but on an objectively measured index that is correlated with losses. Index insurance seeks to provide cover against specific threats that can be captured by the selected index, generally at aggregate scales rather than at the level of individual farms.
It's about creating that enabling platform, the enabling environment where we bring in the private sector, national government, development partners together to ensure that not only do we ensure that farmers can remain productive, but they thrive, in the face of climate change.
smallholder farmers constitute a significant portion of the world's population, with an estimated 450 to 500 million smallholder farmers worldwide, representing 85% of the world's farms. Smallholder farmers are also estimated to represent half of the hungry worldwide and probably 3/4 of the hungry in Africa. Consequently, the fate of smallholder farmers would largely determine whether or not the world succeed in reducing poverty and hunger worldwide.
60% of the African workforce is in agriculture. 80% of those 60% are smallholder farmers. Agribusiness is generating, as of 2010, $330 billion a year. It is forecasted to be about $1 trillion, and this is based on the World Bank studies, by 2030. We have a lot of policies at the continental level. We have a framework like the CADEP process that basically help countries strengthen their planning processes. One of the commitments made by the head of state is to end hunger by 2030. We're not even 2025. We're not even talking about 2030. We're saying we have to end hunger in the continent by 2025. A study that we did at NEPAD has indicated that if we continue on the path that we are right now, we will not end hunger by 2025. In 2025, if we are on the same course of action as we are at the moment, we will decrease undernourishment from 17% to 14% or 12%. Our import dependency will go from 14% right now to 25%. And these are based on a prospective study that NEPAD conducted with the Pardee International Institute for International Futures. But all these projections that have been made are not factoring in climate change. So what basically I'm trying to say is that if we continue to do business as usual, and we don't mitigate, we don't readapt, and we don't bring the smallholder farmers who are who represent 80% of our 60% of the workforce, we will not going to make it.
Experts believe the low penetration of agricultural insurance in Nigeria is typical of a nascent market. Like many early markets, Nigerian markets struggle with limited information, limited access to reinsurance markets, among others.
Talking about Agric insurance as well, for it to thrive, it is not just only awareness that will make it to thrive, but if there is also regulation from the part of the government that yes, we are providing everything it takes to make people have interest in agriculture, to make us to diversify, then what do you now do to secure that your investments? Many people know they don't want to go, many people have money to invest in agricultural sector. But when it comes to some risk that surrounds it, they want to hold back that, no, we don't want to go. But when there is this regulation by the government that says, if you have your farm, or we are giving you this, and you don't have insurance, at least you must have insurance to cover this, to cover this, to cover your activity, the role you play in agricultural value chain. Then, in that perspective, you will see that just like you have a car, you cannot do without at least third-party insurance. The same thing will be applicable, and you will see whether farmer, either literate or not literate, so far you are able to put a car or a vehicle on the road. Your level of literacy will not push you to the extent of not having a third party, at least for your car. The same thing is applicable to farmer.
Achieving the goal of developing sustainable, inclusive agricultural insurance, experts believe will require a strong partnership between the private insurance sector and the government. Well, despite having nearly 20% of the world's cultivated land, Africa's share of the global agricultural market, measured by insurance premiums paid, is smaller than 1%. Experts believe by providing stability and safety net, if the weather fails, insurance can give farmers the confidence to invest more in their farms. Paradoxically, insurance can also encourage these farmers to take a little more risk, which ultimately boosts their yields. But that's our program for the week. Thank you for watching. From me, Ayola Kasim, and the Earthfile crew here is wishing you a Merry Christmas if you are celebrating. If not, we hope you experience the joy of the season. We'll see you next week.